Ever take a moment to really look around your house? I mean, really see it? Admire the space, the light, the memories made within those walls? Then you check your bank account and the numbers just don't seem to match the feeling of wealth and security your home provides? Maybe your wallet feels a little lighter than you'd like. You're definitely not alone. This is a feeling shared by many homeowners across the country, from all walks of life. It's that classic house-rich, cash-poor situation. You own a valuable property, a beautiful home, but accessing that value when you need it can feel like a real challenge. Your wealth is locked up in your home, inaccessible for everyday needs or unexpected opportunities. It's like having a treasure chest you can't quite open. Maybe you want to renovate that outdated kitchen, finally create the master bathroom of your dreams, or build that much-needed home office. Or perhaps you're facing the daunting reality of paying for college tuition, helping your children achieve their academic goals without crippling debt. Maybe you're struggling to tackle high-interest debt, those credit card bills that seem to keep piling up no matter how hard you try to pay them down. But the thought of selling your home, uprooting your life, or refinancing your entire mortgage, with all the associated fees and paperwork, feels like an extreme and overwhelming solution. You need a way to access your home's value, to tap into that built-up equity, without sacrificing your peace of mind or your long-term financial security. You're looking for a solution that allows you to achieve your financial goals without turning your finances upside down, without creating more stress and uncertainty. Imagine finding a secret door in your house, a hidden passage you never knew existed, leading to something truly valuable. That door leads to a vault of your own money, a source of funds you can use to achieve your dreams and overcome your financial challenges. This isn't some kind of magic trick or get-rich-quick scheme. It's smart financial planning, a strategic way to leverage the assets you already have. The good news? That tool exists, and it's readily available to homeowners like you. It's a practical and responsible way to unlock your home's potential. It's called a home equity line of credit, often shortened to HELOC. It's a financial product designed to help you access the equity you've built in your home. Today, we'll break down exactly what a HELOC is, how it works in simple terms, and how to decide if it's the right financial tool for your specific situation and goals. Forget the complicated bank jargon and confusing financial terms. We're going to keep it simple, straightforward, and easy to understand. Unlocking your home's potential and achieving your financial goals should be an empowering experience, not a complicated and stressful one. So let's get into it and discover how a HELOC might be the key to unlocking your financial future. So, what exactly is a HELOC? It's a term you might have heard, especially if you're a homeowner, but what does it really mean for you and your financial future? Let's break it down in simple terms, so you can understand how it works and whether it's the right tool for your needs. Think of your home as a piggy bank you've been diligently filling, month after month, by paying down your mortgage. Each payment you make increases your ownership stake and builds equity. And you're not just filling it with mortgage payments, you're also watching your home's value rise over time, thanks to the ever-changing real estate market. This increase in value further adds to your home equity, making that piggy bank even fatter. A HELOC, or home equity line of credit, is essentially the key to unlocking that piggy bank. It allows you to tap into the equity you've built in your home and use it for various financial needs. It's structured as a revolving line of credit, much like a credit card, giving you the flexibility to borrow and repay funds as needed. But here's where it gets even better. HELOCs typically come with lower interest rates compared to credit cards, and they often offer significantly higher credit limits, making them a more attractive option for larger expenses. The reason for these favorable terms is that a HELOC is secured by your house, meaning the lender has a claim on your property if you fail to repay the loan. Unlike a traditional loan where you receive a lump sum up front, with a HELOC, you're provided with a checkbook or a debit card, allowing you to draw funds from your credit line whenever you need them. You can continue to borrow funds as long as you stay within your approved credit limit, making it a flexible financial tool. Are you planning a home renovation project to upgrade your living space? With a HELOC, you have the convenience of paying your contractors and suppliers as the bills come in, without having to worry about securing a large sum of money up front. This eliminates the need to accurately guess the total cost of the project at the beginning, giving you more financial flexibility and control. One of the biggest advantages of a HELOC is that you only pay interest on the amount of money you actually use, and not on the entire credit line that's available to you. This makes it a convenient pay-as-you-go system, especially well-suited for managing big expenses that unfold over time. It's important to remember that a HELOC is not the same as taking out a new mortgage. Instead, it functions as a second lien on your property, existing alongside your primary mortgage. This means that in the event of a foreclosure, your primary mortgage lender would be paid first, followed by the HELOC lender. In essence, a HELOC transforms the equity you've built in your home into readily accessible cash, providing you with a valuable financial resource. And the best part is, you have the freedom to decide how and when you want to use those funds, putting you in control of your finances. Think of a HELOC as your home's financial superpower, giving you the ability to tackle various financial challenges and opportunities. You have the power to decide how and when to tap into this resource, aligning it with your specific needs and goals. It serves as both a safety net for unexpected expenses and a dedicated fund for realizing your dream projects. It's there, ready and waiting whenever you decide to take action. That's the essence of putting your assets to work for you, maximizing their potential to improve your financial well-being. So, let's explore the possibilities and see what amazing things you can achieve with the power of a HELOC. What can you actually do with a HELOC? The possibilities are wide open. Most people use it for home improvements, using your home's value to boost its value. It's also great for consolidating high-interest debt, replacing expensive credit card balances with a single, lower-interest payment. Funding education? A HELOC can be a smarter, cheaper way to pay for college or certifications. And as an emergency fund, a HELOC gives you instant access to cash for life's surprises. No need to sell investments or rack up credit card debt. It's a flexible tool for real-life needs. Use it to invest in your home, your future, or your peace of mind. The key is using it strategically. That's the real power. A HELOC, or home equity line of credit, operates through two distinct phases, each with its own set of rules and implications for the borrower. Understanding these phases is absolutely essential for anyone considering a HELOC. The first phase is the draw period. This is where the flexibility of a HELOC truly shines. The second phase is the repayment period, a more structured phase focused on paying down the outstanding balance. During the draw period, which typically spans 5 to 10 years, you have the freedom to access funds as needed, much like a credit card. You can borrow as needed, up to your approved credit limit, giving you access to a revolving line of credit secured by your home equity. And typically, during this draw period, you're only required to pay interest on the amount you've actually used. This can make managing your finances easier in the short term. This interest-only payment structure keeps your monthly payments relatively low and your cash flow flexible, allowing you to allocate funds to other needs. This flexibility is particularly useful while you tackle home improvement projects, cover unexpected expenses, or manage other financial obligations. However, it's important to remember that most HELOCs come with variable interest rates, which means the rate can fluctuate based on market conditions. As a result, your payment amount can change along with the market, potentially increasing or decreasing over time. Staying informed about these fluctuations is key. After the draw period officially ends, the HELOC transitions into its second phase. This is the repayment period, which is often structured to last for 15 to 20 years, depending on the terms of your specific HELOC agreement. During this phase, you can no longer borrow additional funds from the line of credit. The draw period is over. Now, your payments are structured to cover both the principal balance and the accrued interest, which means your monthly payments will likely increase significantly. In essence, the HELOC transforms into a more traditional installment loan, complete with a predetermined payoff schedule. Therefore, careful planning for this transition from the draw period to the repayment period is absolutely crucial for maintaining your financial stability. You don't want to get caught off guard by unexpectedly higher payments that could strain your budget. Make sure you thoroughly understand the implications of both phases before you even consider opening a HELOC. When used responsibly, your HELOC can be a valuable financial tool, not a source of stress or financial burden. By understanding the playbook and anticipating the changes, you'll stay firmly in control of your finances throughout the entire HELOC lifecycle. It's all about enjoying the initial flexibility and then preparing for the structured repayment that follows. That's how a HELOC works, from start to finish. Ready to unlock your HELOC? Here's what lenders look for. First, home equity, the difference between your home's value and what you owe. Lenders want you to keep at least 15 to 20% equity after the HELOC. Second, your credit score. Aim for 680 or higher, above 720 gets you the best rates. Third, your debt-to-income ratio, DTI. Lenders want to see your monthly debts are manageable, usually under 43% of your income. Fourth, stable income. You'll need to show pay stubs, W-2s, or tax returns. If you're self-employed, expect to provide extra documentation. Finally, the property itself matters. It usually needs to be your primary or secondary home, not an investment property. Lenders will order an appraisal to confirm value. Meet these criteria and you're on your way. It's about showing you can handle the responsibility. Prep your finances, and you'll unlock the door. The stronger your profile, the better your terms. That's how you qualify. Just as important, know what a HELOC isn't. It's not a cash-out refinance. You're not replacing your mortgage, just adding a second line of credit. It's not free money. It's a loan, with your home as collateral. If you don't repay, foreclosure is a real risk. Don't use a HELOC for short-term splurges or to cover bad spending habits. It's not a fix for overspending. Using home equity to pay off credit cards only works if you don't rack up new debt. Most HELOCs have variable rates, so payments can change. It's not a set-it-and-forget-it loan. Use it wisely, with a clear plan for repayment. A HELOC is a powerful tool, not a magic wand. Know its limits, and you'll use it well. Responsibility is key. Who should consider a HELOC? The strategic improver, ready to renovate and boost home value. The debt demolisher, consolidating high-interest debt with discipline. The opportunity seizer, funding big goals like education or a business with a plan. The prudent planner, setting up a HELOC as an emergency fund just in case. If you see yourself in any of these, a HELOC could be your next smart move. The key is having a clear purpose and a solid plan. Use your home's value to build your future. Make it work for you. Ready to get started? Here's your action plan. Estimate your home's value and subtract your mortgage balance to find your equity. Check your credit score. Improve it if needed by paying bills on time and reducing debt. Shop around, compare rates, fees, and terms from several lenders, including credit unions. Use a spreadsheet to track offers, intro rates, margins, draw and repayment periods, fees. Gather your documents, pay stubs, tax returns, mortgage statements. Apply online or in person, expect an appraisal and a few weeks for approval. Preparation pays off better terms, smoother process. Don't rush. Do your homework. The right HELOC starts with smart steps. Be patient, be thorough. You're almost there. Success is in the details. You've learned what a HELOC is, how it works, and who it's for. Your home is your biggest asset. Don't let its value sit idle. A HELOC lets you put that value to work, whether for renovations, debt payoff, or opportunity. Be proactive and strategic. This is about building your future. Use the knowledge you've gained to make confident decisions. Talk to your partner, run the numbers, and reach out to lenders or advisors. There's no harm in exploring your options. Knowledge is power. And now you have it. Your home holds incredible potential. It's time to unlock it. Make your move.